Right, a look at the Asian markets. They're in fair green territory as we speak, and that's primarily on account of what took place on Wall Street overnight. The Dow ended higher by about 160 points, though off the highs of around 450 points, and this is on account of easing trade concerns with regards to the US and China. The Nikkei higher by about 0.6%, a 125-point move aided further by a weakening yen. The dollar yen yesterday closed at around 113.27, now has weakened to 113.4. That's good news for Japanese exporters, so that index outperforming the other Asian peers. The Korean index high by about 0.4%. Along with that, we have the Straits as well as the Taiwanese indices as well, both of them trading in the green. For our markets, though, we're sitting on a fair amount of rally. Over the last couple of trading sessions, we've gained 400 points from the lows on Monday. At the same time, on Tuesday rather, and at the same time, we have some double macro cheer that has come in terms of the IIP and the CPI data. So the SGX Nifty indicates a start upwards of 10,800 for our markets.
Okay, American companies will have a better shot in competing with China, says Wilbur Ross, if China pulls back from the trade program where they are considering widening foreign access to its economy. Let's listen in.
Their employees are mostly Chinese employees. So if the Chinese did something detrimental to those businesses, they would be hurting their own people. Most of them also have 50-50 joint venture partnerships with Chinese entities, and therefore if the Chinese took some action against those entities, it would also hurt the Chinese partners. So I think it's a lot more complicated than that.
Okay, so that's some opinion coming in from Wilbur Ross himself. But let's tell you what took place on Wall Street. US stocks ended higher on expectations that a US-China trade deal could be reached in the coming months itself. So the Dow rose 157 points, S&P climbed over 0.5%, while the Nasdaq Composite jumped 1% as stocks such as Facebook, Amazon, Netflix and Alphabet shares rose. Let's go across to CNBC's Josh Lipton, who gets us a wrap of all what took place on Wall Street last night.
U.S. stocks rallying into the close, the Dow gaining 157, the S&P up 14, and the Nasdaq rising 66. Consumer prices coming in flat last month, held back by a sharp fall in oil prices. The Labor Department uses the Consumer Price Index to measure the price Americans pay for a wide range of goods. November's level in line with economists' expectations. Lowe's announcing a new $10 billion buyback while reiterating its profit outlook for fiscal 2018. Company expects earnings per share to fall between $6 and $6.10 for 2019. Stock is up 2% on that news. Toyota recalling 70,000 vehicles to replace airbag inflators. The recall is Toyota's second one, as it covers several models between the years of 2002 and 2005. In this latest recall, Toyota is using inflators used by a new company with a safer chemical. That's the action from the U.S. market. Now back to you in Mumbai.
All right, thanks a lot for that. Now all eyes will be on the December 19th Fed Reserve meeting and the President Donald Trump, who is pressuring the Fed against raising the rates, saying that he needs accommodation. Former Fed President Alan Blinder does not seem to be agreeing to his views. Let's listen into what he had to say in a conversation with CNBC's Sarah Eason.
What is forgotten in a statement like that is the Fed is still on the monetary accelerator. The process that we've been witnessing since the end of 2015 is gradually taking your foot off the accelerator and into neutral. Then there's a question of whether you touch the brakes, but we're not up to that question yet. The Fed's not up to that question yet. And with the economy, what did Trump say? Moving like a rocket ship? That's an exaggeration, but the economy's very strong. We don't need the monetary accelerator depressed now.
Yeah, it's a little confusing. You can't have an economy moving like a rocket ship and then be surprised when the Federal Reserve is raising interest rates, Al. And the debate on Wall Street has really been not December. December's priced in. It's more than a 70% probability that they'll hike next week. It's what happens
Correct.
next. And there seems to be a lot of disagreement from economists and from the markets and from the Federal Reserve itself on how the path looks.
I think that's right. I mean, Chairman Powell the other day made much more news than he meant to, I think, when he said something to the effect is now we're getting very close to the bottom of the range of estimates of neutral. That range, if you look at the last dot plot, and we'll see the new one pretty soon, but in the last dot plot was 100 basis points wide from 2.5 to 3.5. That's a big difference as monetary policy decisions go. But the point of it is, once we have the December rate hike, which will come, we're getting pretty close to that range, and it gets to be controversial whether the Fed should pause there, go up a little bit more, or what.
So what is actually going on with the economy, Alan? Things look all right if you look at the unemployment rate and even the pickup in wages that we've seen recently, but there are certainly some underlying signs that confidence is cooling, business investment is cooling, and clearly the market is trying to tell us something. What is it?
Well, you know, markets always exaggerate whatever they see, so I think if you're looking for shreds of pessimism in the current economy, you can find them here and there. You didn't mention housing. That's the weakest part of the economy right now. But there's a tremendous strength in the economy, and the level of the economy with a 3.7% unemployment rate is, I think, by almost anybody's guess, beyond full employment, beyond normal full employment. Remember, full employment doesn't mean every single person has a job. Even in World War II, the unemployment rate got down to, I don't know, 1 or 1.25%. But so the unemployment rate is very, very low, and that's a reasonable indicator of the tightness of labor markets and of markets in general. So, you know, if we should slow down a little bit from the unsustainably rapid pace that we've had in recent quarters, that's far from catastrophic.
All right, with that we move across the Atlantic. In Europe, markets closed higher, and this after President Donald Trump said he was upbeat about the chances of securing a trade deal with China. But top of mind was UK PM May's no confidence vote. That was firmly centre stage. On Wednesday, PM May has survived a Conservative Party confidence vote and is now safe for the next 12 months as per the Tory party rules. The British pound rallied ahead of this vote. The investors expect May to win and strengthen her mandate. However, the key concerns with regards to the vote on Brexit deal itself still remain. The Italian index from the peripheral markets outperformed, with the financials leading the FTSE MIB higher by almost 2%. However, there were divergent moves in the emerging market space. The Russian index ending lower by about 2/3%, while the Brazilian index gaining by about 0.8%. And talking about emerging markets, there are 3 EM central bank meetings today. We have the Turkish, Philippines, as well as the Peruvian central banks that meet today.
Okay, well, let's tell you about what exactly took place in England. The British pound rose on the back of Theresa May getting her vote of confidence from the Tory party supporting her. CNBC's Wilfred Frost, who is tracking the news closely, reports on the same.
That is the key question for markets from here. You're right to pose it, and it doesn't change much. The key thing that Theresa May announced, having won this this vote of confidence, was that she wanted to continue regardless with the Brexit process. Let's listen in to what she had to say in Downing Street.
Whilst I'm grateful for that support, a significant number of colleagues did cast a vote against me, and I've listened to what they said. Following this ballot, we now need to get on with the job of delivering Brexit for the British people and building a better future for this country. A Brexit that delivers on the vote that people gave, that brings back control of our money, our borders and our laws, that protects jobs, security and the union, that brings the country back together rather than entrenching division. That must start here in Westminster, with politicians on all sides coming together and acting in the national interest.
So she wants to continue with her Brexit plan. One of the key questions coming into the vote of confidence was whether or not those that voted against her, if they failed to oust her, if they would then fall in line moving forward, if they would approach the vote of confidence with, OK, we tried to change her position, we failed, now we'll go along with what she wants. But already here in Westminster, a lot of her critics, like the Brexiteer Jacob Rees-Mogg, have not backed down. They've in fact said there were enough votes against her that they think she should resign, and they still don't like her Brexit plan. At the same time, The leader of the opposition, Labour Party, Jeremy Corbyn, has also stuck to his guns and his message that he doesn't like her Brexit plan. So we are left in this ongoing catch-22 that if she does not secure something extraordinary and pull the rabbit out of the hat when she travels to Brussels later this week, that a Brexit middle ground, a sort of managed Brexit, still seems fairly elusive. So we did see the British pound, as you say, rise over the course of today's entire session, but it slipped a little bit after that result because so many MPs had voted against her.
In the currency space, the dollar edges higher ahead of the Federal Reserve meeting next week, where a rate hike is widely expected. But gains were limited on the back of growing expectations that the Federal Reserve may express a more cautious view on future rate rises.
In the world of commodities, crude oil prices are lower after the US government data showed domestic crude supplies declined for a second week in a row, down 1.2 million barrels, which is less than the market expected. Cut in Libyan export also weighed on prices.